Top business news. We can begin with the U.S.'s recent decision to tighten sanctions on Iranian oil exports and the effect it's having on world markets. Brian Quinn joining us in the studio to explain.
Well, crude oil prices hit 6-month highs on Tuesday. They've gained nearly 4% in the 2 days since Washington's announcement that it will not renew waivers on sanctions for the purchase of Iranian oil when those waivers expire on May 3rd. The White House says it's aiming to bring Iran's oil exports to zero as it pushes for a replacement to the 2015 Iran nuclear deal, from which Donald Trump unilaterally withdrew the U.S. Iran's economy already feeling the pinch. It's about to be squeezed even further. Owen Barnell reports.
The market may be busy, but for these sellers and buyers, times are hard. Rising inflation, a plummeting rial. Since US sanctions were put back in place, Iranians are feeling the pinch.
Some people have a fixed limited wage, like us. When prices rose, we had to change a lot of things.
Iran's economy was already creaking at the seams after the renewed sanctions, and that was before the announcement this week that the remaining buyers of Iranian crude would need to shut up shop by May 2nd. As the deadline looms, the pressure is mounting in Tehran.
We've had some limitations with regards to selling oil. However, these limitations will increase now. Naturally, the country's revenues are going to drop, and maybe the rial's value will drop as well. In the end, the pressure that they're putting will fall on the people.
8 economies were granted exemptions last November to continue importing Iranian oil. 3 have already stopped. The remaining 5, India, China, Japan and Turkey, will not see their waivers renewed. US officials play down the impact of the move on markets and oil supplies, saying America and its allies like Saudi Arabia will pick up the slack.
I don't see any palpable impact. The world is awash with oil. The center of the world energy system is the United States.
The White House has not confirmed if sanctions are to be immediately slapped on countries that continue to buy despite US warning, but it's heavily implied the price for those that do will be high.
It's France 24's Owen Barnell. Well, those U.S. reassurances on crude oil prices somewhat backed up by commodity markets Wednesday. Brent crude and WTI futures each falling over 0.5% as traders see an adequate supply on the market amid spare capacity in OPEC nations, Russia and the U.S. Around the equities markets, Nissan shares lost 4% in Tokyo amid reports the company is set to slash its earnings outlook. The Nikkei ending the day down just over 0.25%. Chinese markets mixed on speculation that Beijing is set to hold off on further economic stimulus there. Troubles at Texas Instruments and Samsung hitting the Kospi in Seoul. It finished down just under 0.9%. Here in Europe, indexes opening mixed as investors process a busy corporate earnings season. Better than expected results sending the S&P 500 and the Nasdaq to record high closes yesterday on Wall Street. London's FTSE 100, though, down just over 0.1%. The CAC 40 here in Paris down over 0.25% at the open. Frankfurt DAX, the one somewhat bright spot, opening just above the flat line. Next, Sri Lankan hotels and resorts are marking a significant number of cancellations in the wake of Sunday's deadly terror attacks. The country had been emerging as a leading tourist destination in 2019. That's now very much in question, with the U.S., Australia, and Ireland all issuing travel advisories warning their citizens of possible further attacks. The end of Sri Lanka's civil war saw a major revival of the industry, going from under 500,000 visitors in 2009 to over 2 million in 2016. The Prime Minister has warned of an outflow of foreign residents and money, while the head of the Tourism Development Authority says Sri Lanka will recover.
Economic impact in respect of such an incident is inevitable in the short term. So we will have to face the consequences. But we are keen as a country and as Sri Lanka tourism to try and rebuild the industry with building confidence in the minds of the travelers, potential travelers, and keep moving on.
Well, finally, for business, many, if not most, office workers have probably borrowed some supplies for personal use that may not have been returned. Never myself, never at France 24, of course. But imagine the temptation if your office supplies included miniature servings of ice cream and champagne. Cathay Pacific Airways says it's now cracking down on pilferage amid reports of food, drinks, and glassware being stolen from its planes. The South China Morning Post reports the Hong Kong-based airline is now searching staff as they leave airplanes, with company estimates that petty theft had cost the airline, quote, untold hundreds of millions over the years. 6 employees were placed under investigation over the weekend after allegedly being caught red-handed. The most popular target for theft, apparently, mini tubs of Haagen-Dazs ice cream. Hard to blame them, Will. If I had an unlimited supply of Haagen-Dazs sitting in the work freezer, I can't tell you what might happen.
It explains the sticky fingers.
Indeed.
But you can't fault them for good taste, can you, Brian?
Not at all.
All right. Thanks very much, Brian Quinn. Never stealing office supplies, as he said, at France 24.